Good afternoon, everybody, and welcome to those of you who are dialing in on YouTube. We've had one or two kind of interesting challenges with using this wonderful new platform called LinkedIn Live. You'll just all be very pleased to hear that it's taken us only 6 minutes to transfer from one platform to another, unlike the uh, uh, previous president of the United States of America and what is reputedly the most powerful man in the technical world, Elon Musk. When Trump and Elon Musk took 40 minutes to get the Twitter live feed to work for their mutual admiration chat a little while ago. So we are good. We're live. We're ready to go. Welcome. This is, I'm going to say some words I've never said before, which is welcome to the premiere of our new documentary from the Payments Association, entitled "The New APP Fraud Rules: What They Really Mean for Consumers, Fraudsters, and the UK." So I'm Tony Craddock. I'm the Director General of the Payments Association, and this documentary has been produced by us and We Fight Fraud, and it's an examination of the new authorised push payment fraud rules that come into force on October the 7th. They've been a long time coming. Organisations across the UK have been working hard to make sure they're ready to go for the 7th of October, and it requires a completely new paradigm of thinking and approach, which is being looked on quite carefully by the rest of the world. So what this does is it explores whether these regulations, which are unique, bold, I've heard them to be referred to as, but important in terms of addressing the fraud problem, or whether they do actually protect consumers, whether they will actually reduce the rate of bank-to-bank fraud or authorized push payment fraud, and what impact it might have on the payments industry. So our partners at We Fight Fraud spoke to a wide range of different stakeholders, people, as they investigated what the rules would mean for them and for others. And they produced some fascinating, but I must say, not necessarily welcome and potentially quite worrying insights. But look, I'll let the documentary do the talking. We'll now play the full documentary, go into a discussion with a panel of experts who have been behind this, a previous fraudster or criminal, a previous police specialist, and an academic. And we'll be talking about not only what we want to talk about, but also what you want to talk about. So please make sure you add your comments into the chat so we can hear and understand them. Most importantly, this would not have been possible without Cardac, one of our loyal members at the Payments Association, an organisation that's been around since 2011, and the CEO has been established there since 2019. And he said, look, I think we need to do this and we need to communicate this in a way that's really accessible, which is hence why we've got the documentary format. So now let's go ahead and introduce the documentary, the new APP fraud rules, what they mean for consumers, fraudsters, and the UK.
Morning guys. Good to see you. So, Payments Association has tasked us to speak with a range of stakeholders. Who are likely to be impacted by the forthcoming PSR regulations in October.
We need to understand how is this going to affect the payments industry. Is the new regulation going to be effective in protecting consumers, and ultimately will it reduce fraud?
So I think there's a number of people we need to see, and I think they might be pretty much attached to some of the key elements. So the first one, we know that only UK banks and senders are affected, and they've got to be sending money to another UK account. A customer needs to report a claim. Now that claimant must have been tricked under false pretenses. Yeah. The bank has to reimburse within 5 days unless they are waiting for further evidence.
I guess point 4 then is that it's reimbursement is now split 50-50 between sender and receiver.
Lots of semantics, lots of interpretation, and I'm sure the people we're going to speak to will have a range of views about that. So we need to get out there, get those various opinions, and then come back and have a debrief. By having a wide array of inputs from as many sectors as possible, we can establish a far better understanding of the problems that we face. Dr. Nicola Harding, she's an experienced criminologist and academic who has specialised in understanding the wider aspects of financial crime.
Good morning.
She will consider the traditional perspectives of the industry, victims and wider public. We'll also seek to gain access to those views of the criminals who have been involved with this type of fraud, facilitated by Tony Sales, a fraud and social engineering subject matter expert who was once a fraudster himself. So, with my background of nearly 40 years of working in the law enforcement investigations environment, we should have a good opportunity to help the Payments Association understand the potential threats from the forthcoming regulatory changes.
Okay, so Andy, interestingly, one of the victims who was prepared to come and speak to us on camera as well was Matthew Wright, who is a TV and radio personality. He was caught in a phishing scam. He was waiting for a delivery of something, got that text that we all seem to get these days. It came through and it just hit what was going on in his life right at that time. He filled it in, and before you knew it, he had fraudsters calling him as American Express, then dialed through to him quite quickly. He was defrauded really out of about 75,000, which he was able to capture it quite quickly. But there was a question mark over around 19,000 of it, whether he was going to get it refunded or not.
Let's have a look and see what he says.
It's been one of the most traumatic and humiliating experiences of my life, and that's leaving aside the stress of any of the money. It took me to a very dark place. I don't want to just say it in an arrogant way, if I fell for it, you'll fall for it, but I used to essentially we used to do tricks on people in newspapers, and I've seen it from that side, and these people are excellent, absolutely excellent, like dealing with the real thing. And I can see that £19,000 has been taken out of the account. And this is very troubling. So I phoned the bank. This really upset me. She didn't fully know the case, but she nevertheless inferred that because I had willfully given over all the details to the fraudsters, that it may well be that I was being held responsible or culpable. And she said that she told me that this £19,000 payment was subject to a bank investigation. And the way she inferred guilt and that I might not get the money made my mood, which I've already explained was pretty traumatised, well, just dreadful. I mean, I was off the cliff edge at this point.
I think the key for me here is that we must keep the victims at the forefront of everything.
So I think that's what, the whole focus of this PSR regulation is about better outcomes for victims. So let's hear directly from the payment systems regulator and hear what they've got to say.
So we only have 3 statutory objectives. So we're here to promote competition, to enhance innovation, and to protect users of payment systems. We've been working in the PSR on the problem of app scams for quite a long time. We actually received the Which Super complaint way back in September 2016. So we've been on quite a long journey. We're trying to get to a world where actually the fraud landscape, there's proper incentives for firms to really protect victims, to stop fraud from happening. And when it does happen, protect victims, give them their money back. So today, there are some firms you can bank with or send payments with, and you get a very different experience if you are a victim of fraud to others. So for example, TSB and Nationwide are reimbursing their customers huge, to quite a high percentage, and some firms are not. So helping the consumer to get consistent outcomes today. It's not just about the bank that sends the payment, it's about the bank that receives the payment. And that's why our policy goes 50-50 reimbursement, because we want both sides of that transaction to be equally incentivised. We were quite surprised actually when we started this project, and through the data that we've collected, that actually quite a lot of the time, although a bank might have reimbursed the customer for the fraud, the other bank, the receiving bank, didn't even know that they had a fraudster.
Rightly so, victims' outcomes and experiences are right at the heart of this.
In terms of looking after victims, that sits fairly and squarely with the police. So I went and spoke with our contact at the National Lead Police Force for Fraud, City of London Police.
There are some huge opportunities coming, particularly in relation to the new action fraud replacement that will be coming on soon. So some of those more manual approaches that we've had to take in the past, we'll be able to do at scale in an automated way, working with organisations to take in their financial crime reporting data, turn that into packages for us to act on, but also to improve and speed up our we will call our prevention messaging or protect messages, so we can be much quicker at identifying trends and changes and much more polished working with partners in terms of getting the impactive messaging out to help the public.
But of course, the people who are also having an eye on this are the criminals. Can you see either individuals or organised crime groups taking advantage of this new scheme?
Yes, absolutely. Whilst we welcome the initiative overall, there's always a risk that criminals will try and exploit a new system that people are unfamiliar with. Any opportunity to commit fraud, people will take it. We see that within the existing system as it stands now. So you would expect that to increase in that scale. But we're very alive to that. The industry's very alive to that. It's down to us to kind of make sure we've got the right processes in place to design that out and prevent that as much as possible.
Yeah, I mean, they're definitely thinking that way. You know, I was able to go out, took a little bit of digging and getting hold of someone, but I was able to go and talk to someone who's actively, you know, involved in crime.
Within strict parameters, Tony is able to communicate with people who are still criminally active to understand what the bad guys might actually be thinking and how they will seek to undermine the financial systems that we all rely upon.
Heard that there's a new thing coming and where they're people that guarantee the money back. Now we can go to people before say, look, how much you got in your account? I've got 60,000, 80,000, whatever. If they can be guaranteed they're going to get that money back, why are they not going to let us take it out? They're going to get it back and they're going to get half or whatever percentage we've agreed for them to get, we took out in the first place.
And do you think it would be easy to recruit people that would do that?
When it starts talking them sort of figures in, of course, who don't do that stuff are all of a sudden they're interested. I said, no, I ain't going to do, I'm going to get in trouble. I think, whoa, you're going to get in no trouble. This is what's going to happen. I explained to them exactly what's going to happen. Police won't get involved, you know, because of, I think it's the youth cross, whatever. Anyway, I don't know about it, but police will never get involved for that. They never ever do. Like, the percentage of police if you get involved for it is so very low. Like there is no deterrent.
And he says it, you know, he feels very confident in that there's no deterrent. If you're the way that he's talking about it, you know, is that they would set up, they would get people that have already got money or they don't have money, they could put it through, put money in the account, and how is that going to look any different to someone who's becoming a victim of fraud? Because they can arm these people with everything that they need to say.
Everybody working together is going to be the only way forward. Partnership working is going to be key.
We've got to think, though, of the context of where we're at kind of economically as well, that we're talking about this in. Tony and I have done research before, the company has, around illegal lending, where we found that people who haven't previously got involved because they haven't been that, you know, skint, for want of a better word. Yeah. You know, what he's saying is really mirroring what we're seeing in other aspects of fraud and financial crime.
Yeah, I mean, there's another bit that I think, Nick, where he mentions about what's previously happened before, yeah, when it comes to bounce back loans. I mean, if we should just play that a little bit and just see.
During COVID, the government set up a scheme called bounce back loans, yeah? Was that a theme running through?
Well, I did know people do, yes, yeah. And there was like initially getting bank back loans for hundreds of thousands of pounds. Dumbing it just a few. I know quite a few people who were doing that and they absolutely hit jackpot. Like jackpot. Left the country where they made so much money.
Because they understood that process of what was happening.
Yeah, they knew the whole process, mate.
You know, is there a comparison between bounce back and what the future looks like within the new regulation stuff, do you think?
This new regulation is probably just as same as bounce back. The way it's now, it's like, you know, buying the money out, it's going to bounce back. Because that's it probably end up getting called that. Yeah. To be fair, that's what it would probably be. Do you want to get a bounce back?
Wow.
Yeah, so I wanted to check, because I remember what Warren Atkinson, who's the former head of economic crime in the Northwest, told me previously before around bounce back loans. So I'll just show you this clip, and it's quite interesting.
You know, my team, when I was still working within economic crime, were working to support a significant murder investigation. And there were 17 people that we wanted to look at, and every single one of them had a bounce back. Fraudsters are generally right there on the start line, aren't they, in relation to any new sort of ideas. It's just a license to print money, isn't it, for an intelligent criminal.
The crux of it really is we want to reimburse actual victims of fraud, but we want to make sure that they are actual victims of fraud, and that's the challenge for the industry, isn't it? So I went and spoke to various people. One of them was Jane G, who's a subject matter expert in the space with a background, a legal background, to really try and get to the bottom of how does this regulation affect the industry.
When we're not told what ordinary screening of everyday customers really has to involve, we're told what we shouldn't do, and but we're not told exactly what we should do. What should have come first should have been some standards, should have been where are your sources, for example, of real-time data? Because if you don't have real-time data, we know from reports in the past that many of the providers are giving data which is out of date or incomplete. So how can you determine, for example, is there a network that this entity or this person is part of? Remember, when we're talking fintechs, we're talking a lot of different sized companies. Without a proper data sharing platform, that you're putting a lot of companies at a massive disadvantage. And I think the PSR had very good intentions by doing what they've done, but I think unfortunately they haven't thought about the position of those smaller companies. They've thought they will be okay because we're forcing them to have better controls. They don't say what the better controls are, so there's no prescription on what those controls should be. And of course, they've also not realised that they will be getting criminals who will be thinking about how can we exploit this new legislation. Criminals are better at exploiting technology and legislation than the good guys are, and that's a pity, isn't it?
These things take effort, and I guess the PSR is pushing financial institutions into having to do this now, but it is going to come at a cost, and who's going to pick up the bill? That's something that I then spoke to Hugo Remy, who's the CEO of Cardac. So Cardac are an issuer and acquirer, but they really represent some of the voices of the smaller kind of fintechs and not necessarily the big tier ones in this. They're a bit of a voice for the Davids in this kind of David and Goliath thing of our banking institutions here in the UK. As a smaller company going to speak to the larger kind of banks and financial institutions about particular cases, what's big to you might be quite small to them. So to be able to have that discussion and investigate together or whatever is not facilitated at the moment. Do you think that prior to these regulations coming out, that system should have been set up to facilitate that happening?
Definitely yes. Everyone needs to sit down and discuss those mechanisms, how the cases could be controlled, by who, for example, will identify those cases like it's a criminal case, it's a fraud, and grants protection. There should be some separate government entity and body. It's definitely not police or someone else. And government will need then to allocate resources for this, find a budget, hire people, educate them.
So Hugo makes the point that quite a lot of these smaller fintechs and up-and-coming financial institutions could well go out of business because of this regulation and the financial burden. So I went and put that back to the PSR. Let's have a look what she says. So some people are saying that this is going to kill off a whole section of fintechs. How would the regulator respond to that?
So we're a competition regulator, so we are a big fan of competition. We think competition is really important, but we think competition needs to go hand in hand with protection for consumers. And competition any cost is not going to be right for the UK. So we think this is a really important balance. We do agree it's really important the UK has a vibrant payments landscape, that it's got innovation thriving, but it's also important that we protect the users of payment systems at the same time, and we don't let the competition unfettered mean that we get more and more victims of fraud.
I think it comes back to what we've seen in testing, in all the things that we've come across, is that there's been a serious lack of fraud prevention by design in some of these innovative areas. And, just to kind of say that maybe this is what's been needed to really force that innovation puts fraud prevention right at the heart of its processes.
I think anything that puts fraud prevention at its heart is a great thing. I just don't think we should ever do that without understanding it from the criminal perspective, which is extremely difficult.
So what I did then was I took what Tony had found. I took a little, snippet from that interview, and I showed it to the PSR to see, is this something they'd already thought about? Like, what was their perspective on it? So I can show you what they said.
I'll be interested to see what that is.
You can go to people for say, look, how much I've got in your account? I've got 60,000, 80,000 more of. If they can be guaranteed that they get that money back, why are they not going to let us take it out? They're going to get it back. And they're going to get half or whatever percentage we've agreed for them to get, we took out in the first days.
And do you think it would be easy to recruit people that would do that?
When they start talking them sort of figures in, of course, people who don't do that stuff are all of a sudden they're interested.
Do you want my reaction to that?
Yeah, please do share what you think.
So I think what that particular fraudster is talking about is persuading people to be complicit in fraud. And I think we need to be super clear here, that is fraud. So anybody who is complicit and helping a fraudster, just because they think they're gonna be able to get their money back or they're gonna get some return on it, that is a crime. And we would not expect reimbursement to happen in that place. It is very clearly outside of the parameters of our policy.
But it's a challenge that the banks need to meet, right? Is that their investigations have to kind of take that stance of understanding perhaps what the red flags are if that's the case.
So if you've got a firm who's had a claim from somebody and they've got reason to suspect, but they don't know, they've got reason to suspect that there might be some collusion or there might be first-party fraud going on, they can use the stop the clock provision, which allows them that additional time that they need to investigate.
So how are they going to know whether it's a genuine person or a fraudster?
I think that's the biggest challenge for industry, isn't it? Is that think about how many faster payments, bank transfers are made, and where you can stop the clock where there's reasonable suspicion. How do you have that reasonable suspicion?
They don't look different. They look the same. How do you differentiate that in the masses of information that they're going to be having when it's coming to this point?
We still don't have a gold standard data set for what fraud is. What we are training AI models on, which we're going to have to rely on AI for a lot of this to help us with detection of suspicion, because we simply cannot do it, at a human level to be real time. What we're training and doing machine learning with is not proven fraud data. It's what we think fraud looks like. So like you said, how do we train those models?
Computers don't commit crime. People do.
Yeah.
Need to understand the people. And to sort this out, what we do now need is some great people supported by some great tech. It's going to be the only way to sort this and any other fraud problem out. We'd probably come up with some fairly straightforward sort of agreements and solutions with everyone. So I think at this point, we just need to get our findings back to Ben. But we might actually raise a few questions that are going to need monitoring right throughout the process. So Ben, we've spoken to a wide range of people. Now, the good news is all the stakeholders agree with the premise to adopt the reimbursement scheme is positive.
Okay.
What they have some reservations about, perhaps, is either the parameters or the implementation.
Mm-hmm.
They did raise concerns it can be difficult for the payments companies to restructure both tech and people and to identify and reimburse those fraudulent claims. Lots of people mentioned sharing the right data, both securely and across various sectors. That'll be the key to preventing any fraud, not just APP fraud. Everyone's sold on the idea, they have been for years, but we all know that data sharing is really straightforward, both from a legal and operational perspective, and perhaps that's one of the main concerns. I think what we did here was that the new rules may disproportionately affect some of the smaller companies. They won't have access to the data or perhaps some of the resources of the big players, and they're concerned about the risk and financial burden that could put them potentially out of business. What we found out is that criminals are very aware of the proposed changes. They've planned for them and they're ready to seek to exploit them. They're considering recruiting mules to make fraudulent claims. We know they've done this previously in other areas. This obviously begs the question that what we might actually see as a result of the changes is an increase in fraud, and that'd be concerning in itself.
Very much so. I think actually that validates a lot of what we've been hearing from industry.
It's interesting. So how do you think the PSR might respond?
Look, I think the PSR is listening to the sector. They've already consulted on reducing the reimbursement threshold down to 85,000, and that's before the new rules have actually been implemented. So I think that in itself is very positive. But I have to say, I mean, does that address some of the problems that you've raised here? And in reality, a fraudster still sees there as a big opportunity at 85,000 as a reimbursement level.
Yeah, because in the middle of our consultation with various stakeholders, we got the news and I watched it and I thought, yeah, that's probably assuaged some concerns, but the real concern we've been highlighting is that criminal opportunity. Exactly. Will this just increase all of the problems that we have? Yes, of course, it will be more claims, but then how do they deal with those claims? It's probably compounding all of the issues that we've raised as part of it.
I think so, and I've always felt quite firmly that tackling fraud at source is the most powerful way of protecting consumers and ensuring that they don't fall foul of these kind of scams. And at the moment, there is still no legislation that involves big tech or social media platforms where, let's face it, a lot of this fraud is currently originating. So again, there's a gap there.
As we always find with these things, you get perspective, things slightly change, and then you start thinking about a number of other things. Agreed. But certainly a good basis for further discussion.
Hugely so, and the Payments Association will continue to work with the PSR as we share these concerns and these identified unintended consequences. But let's stay in touch, and I really appreciate your support.
Yeah, thanks for the offer.
Phew. Well, when Tony Sales and I had a chat at Pay 360 in March of this year, and we said, well, why don't we just think through what the unintended consequences of these well-intended regulatory changes are likely to be? I'd never really thought that we'd hear what we've just heard. And I'm pleased to hear that it's not just me who's concerned, but there are others as well. What I'd be very happy to hear is your questions from the LinkedIn chat, which is now live, and from the YouTube projection of this launch. But I'd also like to welcome back or welcome an audience and essentially move into a discussion mode. I'm going to bring in, first of all, the founder of We Fight Fraud, Nicola Harding, who's an academic and a criminologist, the CEO of Cardac, Hugo Remy, who you saw on screen there as well, Tony Sales, who's the Chief Product Officer and founder of We Fight Fraud, and Warren Atkinson, who's, as you also saw, very well qualified as a previous detective inspector, who is now a course leader at the School of Law and Policing at the University of Central Lancaster, and a former head of economic crime at Lancaster Police. So welcome, everybody. Thank you very much indeed for joining us.
Hello, good to be here.
So look, we said we'd first of all start by giving our first reactions, our biggest takeaway from the documentary. Nicola, let's start with you. What's your biggest takeaway from the documentary?
For me, it really comes down to that, And I kind of can't illustrate this enough, is that fraud it just costs everyone. And I know that this legislation really is focused on making sure that victims are reimbursed and that they don't feel some of the financial harms that come, because obviously there's more harms for victims of fraud than just the financial aspect. But it's to try and alleviate some of those harms and ensuring that they're reimbursed. But ultimately, there's a price to pay with fraud. If we're expecting financial institutions to cover the cost, whether it's split 50-50, that money's got to come from somewhere. So the cost is ultimately going to be passed on to businesses, to consumers. And I think what this documentary does is really gives us that holistic overall perspective of when you put all these different views together, from industry, from victims, from even the criminal element, which is so often not involved in any of these conversations. You begin to understand that there's a much bigger picture here at play, that we've got to think about what the consequences are, both positively and also the unintended consequences, and exactly how they may alter, the payment system, the service that we're able to give our customers, and the victims of fraud. So I think it's a really good starting point to illustrate the sometimes unintended consequences of when we try and control fraud and deal with fraud. For me, it really points back to, we've got to really, really focus on prevention so that reimbursement doesn't have to happen because the fraud didn't occur in the first place.
Absolutely. And prevention, of course, if we can plug the holes in the bucket, then we don't have to spend our time doing what we're doing, which is mucking up or cleaning up the mess on the floor, which is basically what I think we're doing in the UK. Is we are keeping the holes in the bucket. The frauds are still happening, suffering financial distress, but they're suffering a lot of emotional distress, and essentially a large amount of money is coming from the payment service providers, the PSPs, some of whom are banks and some of whom are e-money institutions. Essentially, money is going from their balance sheet to the fraudsters via scammers, via victims. It's not a good and pretty picture. But Warren, what do you think? What's the biggest takeaway from that presentation or from that documentary for you?
Well, I think the concept is really sound, because we do need to keep victims at the heart of this, and consumers. That being said, I think this is quite a siloed approach. So I can see that we've got Bob Butler's mentioned, telecoms, internet providers and social media platforms. They are absolutely at the heart of all this, and yet there seems to be very little in the way of regulation in relation to those organisations. And albeit they can quote large numbers of people that are looking there to try and reduce the fraud space, the reality is that compared to the size of those organisations, it's actually minuscule, and there needs to be a lot more pressure brought to these organisations for me.
Very helpful, thank you. And Tony, what are your highlights from or your biggest takeaway from this?
Just how ready criminals are to just switch it on. I think a lot of people underestimate that, and in a moment, they're able to take something and totally undermine the process of what good, honest, hard-working people put in play. There are no tools that is able to spot this stuff. We know that it can't just fall on the laps of the police to report every single, to investigate every single thing that went through. So how do we get to that correct information? So I think that we don't want to get into a position where we're giving so much back to the consumer that we leave ourselves with what could cause a massive gap and lag in knowledge if we miss that preventative part out.
So look, Remy, I agree with you, Tony. Remy, what's your biggest takeaway from this? And you're a professional compliance consultant, so from that perspective, what's your biggest takeaway? I think we might have a technical glitch. Can anybody else hear Remy? I can't.
No.
Yeah,
I'm sorry. I'm sorry. I muted myself. It's my fault. Yeah. As you know, working not only in UK, I'm working also in Washington with the Congress, and I see what kind of fraud US is facing and what's happening in UK. I think that this initiative will have a completely opposite reaction. It will make only a new business model for fraudsters. Imagine we are giving a new source of income to the fraudsters with this initiative. They will find the people who will be willing to help them. They will know that it is a fraud. But look how police is overloaded, and there will be, look, for example, take an example of SAR reports. You know how it takes. Usually when you send a SAR report, you receive just a warrant, an order, a protection order, and that's it. To take a real investigation about particular SAR is very difficult. And the same will be here. If we will start sending to the police all the reports, filing them, how long would it take? What is a reaction time from the police when they must reply? How long would it take? So from my own professional opinion, I totally agree that we need to protect our customers, but everything starts from the beginning. You need to pay attention on to whom you open accounts. You need to make a proper KYC. Proper KYC is not just to get a passport, ID, and utility bill and account gets open. No, you need to understand who's your customer. Take an example, a credit rating. If you want to get a credit card, it's a real challenge, and it works. Why we can't implement same rules here? When we open an account to someone, we need to check various factors, not only, a very simple basic things, especially like utility bills. Utility bills nowadays nobody still can't verify. But if, for example, there will be a new rule and we will have access to the database like credit firms got to the history of where person was living and etc. So we can build a better customer profile. It will give an advantage already to reduce the level of fraudsters who will try to make it. So my personal opinion is we always need to think about our customer protection. It's our obligation, right? And it's actually a service level. The regulator is making a great thing, but once again, from my personal opinion, it will have completely opposite reaction, and we will increase a huge amount of frauds coming. Exactly like in this movie, what fraudsters told. It will open the gates to where we don't want to go, all of us. So, and it's unfair from my personal point of view to put liability on those who receive the funds. Because what can we do in this case? We receive the funds. We have not made KYC. Nobody shared with us any kind of information. So that's my opinion.
So that's really helpful, Remy, and certainly you're seeing it from a practitioner's point of view, and you're out there every day. So look, we've had some fantastic questions coming in through the flow. So thank you for those to many of you who have had been at the front end of this. I want to be able to share these questions with the audience, or sorry, with our panel. I think I'd like to ask the question of whether the artificial intelligence large language models, which is really the sort of the future of the technology industry, is applicable to helping to solve the problem here. Because essentially, if we don't stop the fraudsters from scamming the victims, there's going to be a massive impact, not only on fraud levels, but on the capacity for the industry to reimburse consumers who are genuinely scammed. Can we use the AI models that are being deployed in the market in some other parts of technology to solve the problem here? Warren, why don't you answer that question?
Well, I mean, just to draw an analogy, just in my current employment at the university, there are lots and lots of applications now that will assist students to apply AI towards answering questions. Now, you'd think that'd be quite easy to pick up, but bearing in mind that the AI is generative and it's sort of effectively a learning model, once you put something in place, pretty much the second that you've come up with a solution, that solution will be irrelevant, basically. And there are people in the sort of the tech world and digital world who are far more gifted than I, and it really is quite simple to keep ahead of that kind of thing. For me, I think AI probably does have some benefits in relation to sort of speeding some of the processes up around know your clients, etc. But the really big glitch for me, as I say, is looking at just one aspect of the financial service, not involving social media companies and telecoms companies who will routinely provide information to people who can effectively ring people up and ask, and purport to be from a bank or from the HMRC or the police. It is they can pay for it and they get it no questions asked. It's an absolute disgrace, you know. So there's a lot of these things going on. And for me, in relation to the banking processes, with all the different, you've got all your commercial information, you know, which clearly is confidential for those reasons. But we need to find some sort of an algorithm that, say, Hugo's bank could go to somebody else and just double check that certain, Wi-Fi routers or telephone numbers or emails aren't basically clustering and attacking lots of banks and other organisations at the same time. And that's really the only way you're going to pick up the volume that is sure to come.
Yeah, so it's a really great answer. Essentially, you're saying this isn't something that the police are qualified to or equipped to resolve. Therefore, there's no point really forcing degree of reporting, because they're just going to sit on a report somewhere and not actually be acted upon.
Yeah, so in fairness to law enforcement, I mean, it is a bleak picture. You know, last academic year, the fraud and cyber-enabled crime increased by 140%, you know, and the argument now is it's between 40 and 50% of all crime. But then you'll read in the newspapers that crime is down. But the reality is, if you add those two categories there, then crime is significantly up, you know. So there's a lot of dishonesty in relation to the way that some of these figures are produced. The thing that happens in relation to law enforcement is if you pick up an investigation, then it takes time, but it's doable. So Hugo mentioned the SARS process. You know, we had some success in Lancashire where, using the legislation, the Proceeds of Crime Act legislation, you know, there's some good legislation there, but it's having the headspace and it's having the time and the resources and the speed of response from other financial organisations to allow that to happen. So when I was there, you know, we took a considerable amount of money out of some bank accounts with no drama whatsoever. But the fact is that, you know, that was based on about 5 SARS, you know, and at the time I think we were picking about 3,000 a year up. You know, so the volume is the issue. So the reporting, I think, is still important because, yeah, again, when we talk about artificial intelligence, you know, there's some large models now that can analyse and look for similarities in text that's used, keywords. So have I said I'm called Inspector Brown, for instance? So you can pick up some of the MO type stuff like that. You can pick up your ISDNs, your mobile numbers, emails, those kind of things. So around sort of money mule type work, you know, sort of there was an operation about 3 years ago whereby by doing all that analytical work, there was a very, very big hotspot within the London city. And there was an awful lot of activity based around that, but that was all of the police forces sharing CCTV images and the stuff that I've already spoken about. So you can imagine from the banking and financial services world, there's a lot of investment there to be able, you know, because this is this thing about returning everything within 5 days. And to me, I don't understand how someone can necessarily make that decision in such quick time.
The reality of it is, though, going back to your question originally, Tony, around can AI actually, you know, make a difference in these large language learning models and stuff, is the technology is there, but the understanding isn't. So what we've shown in the documentary and what we're seeing from the criminal aspect is that they are going to pose as and look like actual victims of fraud. The key thing of it is you can train a model, the technology is there, you can train that technology to identify key behavioural aspects. It's there, it's already been used in other aspects to prevent against fraud in really brilliant, innovative, revolutionary ways. But in this specific instance, what the criminals are saying is we can now recruit people because of the economic climate, because of the fact that, we're all in this kind of context where actually, cash is tight for everyone, is that those criminals can socially engineer people to go and look like genuine victims of fraud. How can you differentiate between someone who has no other indicators that this could be a fraudulent activity, who for the first time is claiming that they've had, a £60,000, £70,000 worth of fraud happen to them? How can you tell when that looks like a genuine victim and you want to support them like a genuine victim? How can you then accuse them of being in cahoots with a criminal? Because that's what the criminal is going to play on. You're not going to be able to teach that, or with the current information and knowledge that we have, you're not going to be able to train a large language model to identify that. And that's the key thing with this, is that it's about criminals using the system against, they'll learn that we can get this reimbursement, that it's something that has to happen, and they will exploit that. So yes, it's there and it can be used in brilliant ways, but it's about how social engineering and criminal, human behavior can get around that. And we can only teach, AI and large language learning models what we know and we can detect. If these two things look the same, how is a compute to the human eye, how is that going to be detected by the artificial intelligence that we're teaching? So I think tech is an issue, but it's not going to be the silver bullet that sorts this problem out.
So look, I'd like
If you
to
allow
call on.
me,
Yeah, sure.
yeah, sorry, I want to
Jump in.
give you a brief comment. If you allow me, I would like to say about a credit scoring example. Look, when you want to open a credit card or get a loan, how good it works, because those credit bureaus got a lot of data about your payments for rent, for mobile phones, for everything. They got almost complete profile of each person in UK, but not financial institutions like automatic money institutions, payment institutions, and other firms don't have access to those databases. In order to get it, you need to have a proper license, like a credit, microloan license, or you need to be a bank. But if we can get an access to this database, we can implement it inside the KYC process, and then when we will open, for example, an account for a particular person, we can see the full history of it, and we can take more professional decisions. For fraudsters, it will be so difficult to open accounts, because what's happening right now, if you fail to make your installments on your mortgage or on your credit card, you will never be able to open any credit card with any other companies, at least for many years. We should use this practice. We shouldn't think about AI and all these new, fashion things which are going on the market. And it's just start. Of course, the AI is a technological tool, but we have a lot of resources right now that could be used. It's my opinion and it's my advice.
So I think there's a very valid opinion. My worry, Tony, is that we end up having such a tough way of, it's so tough to open an account that lots of people who maybe don't have such a great credit history won't be able to open them. I'd like to get your views on this, because you've worked with and spent time with people who are perhaps a little bit excluded. And if we make the bar so high that people, only certain sorts of trustworthy people can become an account holder, then lots of people don't have an account.
Yeah, I guess for me, it's the criminals are not going to think like that, right? It's like what Nicholas said. Like, we shouldn't underestimate what they do. So as a criminal, I've done this. I want to see the credit rating of the person whose stuff I'm going to use, because I'm going to use that to my advantage. I want it to all be nice and shiny and fit in all the boxes that it wants to fit in, because I want to succeed. And the way to make it succeed is it's going to come down to, hello, I've been a victim, of fraud. Like, that's what it's going to come down to. It all comes down to that phone part, and tech can't solve that problem, because tech's looking to do everything quickly, because we all want fast, seamless processes. It just, criminals are going to just fit in. What about synthetic IDs? That criminals have been doing them for however long, that are already onboarded, that this just fits into that play. People that owe money, like what Warren said in the video, this just fits into that play. There'll be every criminal gang worth their salts has someone like the old Tony round them, that when people steal the gang's money, they need to find ways to get that money back. You know, this fits in, and then it snowballs because Bob, Mick, Paul, Jane, Claire, Sarah all start to know about what happens and all start doing it. And that's my biggest fear of all of it, really.
So look, I think that's a very legitimate fear based on what you've been hearing. I'd like to ask, so thanks to Mike Hallian, Danny Hereford, Ignat, Des Halliger-Bowman, Stan Rubin, old friends of ours, Adrian Field. Good to have you on all these questions. Please keep them coming. I'm not able to get to all of them, but I'm going to ask the one about collaboration here. Des is asking about this. I hear a lot of references to collaboration, but that's not historically a feature of the financial services industry. For example, the lack of collaboration at CIFAS, where smaller payment service providers are not allowed to play with the big boys. Can I, Nicola, ask you to have share your views on this? You know, from the point of view of the world of academia, where you're expert in criminology, is collaboration between members of the industry a prerequisite to solving this problem? Because we all want to solve the problem, we just don't think this is the way to do it. But is collaboration legitimately possible?
So I completely believe in collaboration. I think the only way that we're going to manage to make a dent into the fight against fraud is by meaningful collaboration. And what I mean by that is, when we talk about tech, there's loads of different, solutions and platforms for collaboration, but we have such a wealth of knowledge, resources across the industry, but we're siloed in our institutions. And within our institutions, we're then siloed in our departments. You have your KYC, your AML, your fraud team, your customer services, and that they're all, even trying to work together across one institution can be really difficult. We need to use some of the innovations in tech to allow, our fraud investigators in one bank to be able to work collaboratively with fraud investigators in another bank. There's ways of doing that, and data sharing. It's not impossible. We can rest back and say, oh, but GDPR, come on, there are ways of doing this, and collaboration has to be more than going to a nice lunch, shaking hands and saying, yes, we're going to share data and work together and what have you, and then we forget about it until the next nice lunch when we say we're going to do the same thing. We actually need to look for meaningful ways to use some of this tech to allow us to, in real time, though, we've got time constraints, but we've got tech that can help with this and really
Yes.
make a meaningful difference. And that
And
sharing that data, for the criminal world, Tony will tell you, criminal world shares data at the speed of light. If they spot a vulnerability, they will share that information amongst their crime networks, amongst their peers. It's a way of them collaborating and getting ahead. We have to operate in the same way.
we
This lack of
we do
collaboration is actually to our own detriment.
we do, Nicola, but the challenge is that we're legally not allowed to in some respects, and also commercially, it's not in some companies' interest to share data. I've got some other ideas of technology that have come through from Adrian Field as to why we don't use identification, strong customer authentication, biometrics. Why is it, he's asking, is anyone allowed to receive large sums without any ID or confirmation that it's for a legitimate purpose? And I think, that's a really great question. Tony, I'm sure you've got some views on how convincing some of these people are, but I also see Hugo, and apologies for referring to you as Remy earlier. You can call me Craddock whenever you like.
No
Please,
need to apologize.
you had your hand up and you wanted to contribute.
Yes, thank you. I just want to comment about giving an example with SAR report. For example, let's say we have identified as a firm that someone broke law. We have made our SAR report with all evidence, and we hold money of particular fraudster. Right now, what usually we receive as a feedback: thank you for submission of the report. You got a warrant. You can release the funds. I completely disagree with this. I think we should learn fraudsters about the consequences of their cases. When we can, for example, instead of giving the money back to the fraudsters, we can send them to the government, and government will freeze it. And if the fraudster think he's, let's say he's not guilty, go to the court, try to prove to prove that you're right. Otherwise, the government will confiscate those funds and use for the benefit of the country. And that's how it will learn both parties, fraudsters and the ones who help fraudsters. Because in this case, they will understand they could get a real damage. Of course, it's my position. Maybe it's too strict, but it is how I think.
But okay. So who would like to comment on that? I think it's a good point.
Sorry, who did you say then, Tony? Sorry.
Sorry, in fact, Warren, I'd like you to comment on that. I said who would like to comment, but
All right, okay, sorry.
Is Hugo being
no, I mean,
too
that is the stuff that Hugo's talking about. I totally agree with. I'm sure it's the same across Europe and the US, but it's the volume of this really fantastic information is just not being addressed properly, despite the best intentions. So I'm not here taking a sledgehammer to my old organisation and the National Crime Agency. There are some fantastic people involved in this trying their best to make a difference. But ultimately, it's always far too little and far too late. There's been so much rhetoric in the period of time I was involved within economic crime from a number of governments. But at the end of the day, there doesn't seem to be a great deal that's delivered to support people. I mean, and when we're talking about financial services and banks and what have you, it's not just their problem. This is it's trillions and trillions of pounds, of damage to every country that's subject to this.
And I have heard that the bounce back loans, they were totaling about 40 billion, and that about 15 billion of them are simply not being repaid because they were taken out by people who either didn't exist or they ran away or they took the money abroad. So do we where's that in this case? If this is an equivalent or larger potential scam or potential problem, where's that 16 billion pounds going to come from? I Tony, on a slightly different question, I'm going to bring in a comment that's referred to on here. It doesn't have an author. But it refers to Ray Blake at The Fraud Guy Presents with Peter Taylor. And he talks about the recruitment of fraudsters. He says that they're already seeing, ahead of this scheme, massive recruitment of fraudsters over the Meta platforms. Is that something you're seeing, Tony?
Yeah, I mean, there's always recruitment going on. I mean, a lot of the stuff on Meta is dressed up in language that, if you're looking in between the lines, you'll see it, and then it gets a bit more blatant. There's lots of recruitment across everywhere. The same old, the Telegram groups, the WhatsApp groups. These are where you get people that understand these processes and start to sell them methods, right? And that's the bit that's really scary. So you get into a method being sold for 50 quid. I sell the method of getting around it to you, Tony. You tell 10 people, you sell it to Hugo. Hugo tells 10 people for 50 quid. And now you've got 20 people all doing the same fraud that's cost £100 to find out that information for. And that is exactly what's happening. It's happening in multiple different ways, right? So it's the same way that they use IG, all of them. There's Snap. There's loads on Snap. Yeah, like Snap is, you see so much stuff from money muling to recruitment, like what Ray Blake says there.
I'll tell you what, I'm going to go into the fraud business. It sounds like a really lucrative place. I think I'll forget being the Director General of the Payment Association. I'll become a fraudster. Sounds fantastic. So Nicola, go ahead.
Well, what you've got to remember, right, is fraud's a social problem. Like, it affects financial services. It affects all of us, but it's a social problem of people for this. Is a social problem. It's from the fact that, we're paid enough, that we've got rising bills, that we've got, kind of needs, wants, desires that aren't being met. So when someone comes, on Meta, on whatever platform it might be, in person, and says to you, you can't make your mortgage payment this month, it's all right, I can help you out. Ultimately, we're almost into kind of Robin Hood territory, where people are saying, actually, are these the bad guys, or are they just really helping me get by? And so if you break it down and say, well, whose responsibility is fraud? Who's paying the price of it? Who's responsible for it? And ultimately, who is going to keep paying the price for it? And it's a societal problem, and it's a problem we're all going to pay the price for. We're just seeing a case
Yeah.
study of it now in financial services, but ultimately that's going to trickle down into businesses that can't get business accounts. Financial services that we have to pay for, we can no longer get for free. Ultimately, if we don't get this
But
fraud problem checked
that, that,
at the
that,
social level, and it's going to fundamentally change how we can all live our lives, way beyond the victims of fraud and way beyond financial services.
so you've just highlighted the consequences of not the regulation, but the consequences of the endemic, or the pandemic, if you like, of fraud being everywhere. And the consequences are that all of us are going to have to pay the price, not just the people who are scammed, but the rest of us, through higher prices, poorer service from our payment service providers, less access to accounts from the vulnerable, inability to pay people who are new, inability to receive money from new people, without going through a whole lot of hoops. And it's kind of typically in the world, it's fine if you've got money, but if you're on the edge of society, you're likely the one who's going to be most vulnerable for being scammed, and most vulnerable, as Tony just mentioned, for being enrolled and recruited in one of these schemes. Hugo, got any comments on this?
Sorry, you asked me, yeah?
Yeah, please.
Yeah.
Please.
Oh, I think everything was just mentioned is totally right. We should think about psychology of the people. What they will think. They will think that those guys, banks, financial institutions, got enough money, to cover all those costs. So the statement about Robin Hood is who will, let's say, we all know economical situation in the country. We all know that many people are suffering right now, and they will see a chance in this. And I strongly doubt that they will think about the banks or financial institutions and they will take care of them. They will simply use this as an opportunity, see this as an opportunity, and they will use it. And they will never feel guilty about it. And as a result, would be everything what you told, Tony. The prices will go up, the financial institution will shut down, service will go bad, compliance will get even worse, the payments will be monitored, more strict, and there will be more questions, but it will never stop the fraudsters, because fraudsters are always one step ahead. It's their job,
So I want to kind of think a bit positively about this. We've revealed some interesting insights. I thought the PSR's commentary made a lot of sense. You can see the rationale behind this. I think they are struggling a little bit because they do not have the root or the source of the fraud within their regulatory boundaries. So the PSR can't involve the social media or the social commerce companies in solving the problem, as they can in Australia, where, by the way, the largest fraud there was insurance fraud. They took insurance fraud, they got everybody round tables, they came up with a series of coalitions, and they tackled this one. And within 8 months, they'd reduced the level in fact, sorry, not insurance, investment fraud. They'd reduced it by 38%. But that's because they had the right people around the table motivated to solve the problem. We are around here think that there's likely to be a growth in fraud. But surely, there's a good idea that's come from Twist 009. I'd love to know who Twist 009 really is, but it's a good question anyway. Financial institutions should investigate APP fraud reports in the same way that an insurance company would report a theft claim. Surely, Warren, that's a good idea, and we should do some of that.
It's a very good idea, but I can tell you one example from the core schemes. We always maybe we shouldn't go so far, and we shouldn't think about AI and etc. The core schemes, like, I will not promote them right now, but you know what I mean. They have a very good example how they fight fraudsters. In this case, unfortunately, it's not car holders, it's merchants. When an acquirer, for example, like us, identifies someone on violation of master okay, of MasterCard, Visa, or UnionPay rules. We have special systems, a blacklist in simple words like Match or system, for example, with MasterCard, where we submit a file with all report about particular merchant. And this merchant will be never able to open an account everywhere in the world with any bank or financial institution who is a participant of this card scheme. And it prevents for the future fraud in another country or for example, even in UK with other banks. We have a huge database of cardholders who are fraudsters, but there is no mechanism right now how we can file it. We can implement, we just can copy the same mechanism with the classic payments inside the UK, and we can file, for example, each financial institution in a bank can file to a special government authority system a file on a company or on a person with evidence, of course. And after, if this person thinks it's not guilty, they can try to prove it, and they can try to file a report, etc. So that's what I want to say. There needs to be a database. We need to exchange this information privately because in this case, card schemes are not disclosing the information which acquirers share particular information. They know each their member. It's the same like.
So the data sharing case, very strongly made, and I completely agree with you. And there's lots of people who talk about doing that. There's not enough people actually doing it. I'd like to encourage some more questions from the floor. There's still a few that we haven't answered. I'm going to pick up on the one that's from Laura Ushabasta. Where do we stand on pushback on the reports received as the receiving bank? We see little or no information or documentation. Can receiving banks push back on receiving a payment, knowing that 50% of it might have to be refunded if it turns out to be a fraud? Nicola, do you want to comment on that?
I think there's a whole host of things that we've got to think about now from the receiving bank point of view. I think one of the things to remember with this is that reimbursement in the UK is not a new thing. We've had voluntary reimbursement for quite a long time now, and there's a lot of institutions that were doing voluntary reimbursement that from the 7th of October, their fraud bill is now going to be cut in half. So when you talk about who's motivated to do this and to push, one of the aims of the PSR in doing this regulation was to motivate financial institutions to put more money into prevention and in more meaningful ways. And there has been some of the main financial institutions have already been doing this reimbursement, and they still haven't had the motivation to put it into prevention. So if we look at kind of what history tells us is that, those banks have, or your financial institutions have previously foot the bill. From the 7th of October, that bill will be cut in half potentially for them. But those that have not had to foot the bill previously and are now going to have to not only invest in prevention and also reimburse, where they may have received or they may have victims of fraud. The key thing of it is that kind of punishing, because it kind of, I guess, feels like punishing the receiving bank for receiving criminal funds, is that data sharing is important for that, because if a bank is receiving criminal funds, it's likely that the account that it's going into is a money mule account. So actually, if you can share where there has been money received in and say, we think that this, there's a suspicion here that this could be, fraudulent funds, if there's a money mule account being used, it's not just taking money from one victim, it's going to be taking money from multiple victims. So obviously that institution's going to be liable for that, but it also does indicate that actually that account's compromised and needs to go anyway. So there's a kind of a whole range of things mixed up with this receiving kind of aspect. It's not simply, oh, that account belongs to a fraudster. It's actually, there's a whole load of due diligence that needs to be done wrapped around those receiving accounts, which if you've only got, a reimbursement request, you haven't got the information to act on.
So that's really helpful, and you're right to say that there's essentially two parties involved, the sending and the receiver, and so normally the receiver could be a mule. Richard's made an interesting comment in one of the chat streams here. Prosecuting the complicit victim or mule is not the answer. they are as much the victim as someone who is truly scammed. And Tony, you might be interested in this. Organised crime will find a way to lend funds to the vulnerable mule and lean on them to participate in many cases. And they'll find a way to cover the proof of funds requirement, and it will be almost impossible to prove complicity. Do you agree with that? Is it going to be hard to get the money mules? And you do a lot of work for universities to prevent students becoming money mules, don't you?
Yeah, I mean, it's exactly what you, as the criminal, as you would consider as like a perfect loop. Oh, it's all going to close. Lovely. Don't worry about it. Look, you come over here, do it like this. You owe me a load of money. I want my money. Otherwise, I'm going to kill you. Yeah. I'm not pretending. This is serious stuff. Like, this is what happens. You just stole his money. You owe him that amount of money. So get your uncles, your granddad, all the people that are old. I want to talk to them. Yeah. Because they're going to save your life. And at the end of it, they're all going to get their money back. Like, that's how easy it is. Like,
Wow.
it's not, like, because we're all decent, hard-working, honest people, we don't realise what criminals are going to say, or, they don't care about all them things that affect your family, that affect all those things they'll put into play because they're just worried about the money coming back. Yeah, and then you got your money from the granddad, didn't you? You've covered it. Like, Warren's lot are not even going to think about it because, of course, the granddad's got money. Like, that's how quick it is to circumvent these things, yeah? Just quickly. And then when you sit down and think it all out properly, the ones that are active now, knowing all of the triggers, knowing all of the stuff, and all the latest investigation stuff, they're going to be on it and understanding it. Because I would, and we're understanding it from this perspective, talking to everyone now, because that's why we're all here. We can all see, goes back to that first conversation that you and I had, Tony, we can all see there's a serious issue here, and if we don't get a hold of it, this is going to be really bad for all of us. Yeah, no matter what, whether you're a consumer or in the industry or whatever, we're all going to end up paying for this sooner or later because, like I said, we'll end up going back in time because we haven't prevented ourselves from learning the stuff needed because that's all right, don't worry, it's all been covered. Now we're in a lost bit.
I think you've made a really good point. I've been saying for a while, we're moving from an era of faster payments being the norm and the default to an era of slower payments being predicted. And as a result, because I come around to Warren's place, I want to buy his car. And Warren says, look, you know what? Last time I tried to get money from somebody to buy something through eBay, they tried to do a direct payment through the bank to bank. It took days. So why don't you just give me some cash? Okay. So I'll pop down to the ATM and I'll get a few thousand quid out of the bank in cash, and I'll pay you that way. Because at least cash, I know you're going to get the money. With a bank to bank now, you don't. Especially if it's a new payment, and especially if it's a big payment.
Well, and here's the other side of it. Yes, I'm sure Warren would have. When I was in prison, I was in prison with a guy that used to advertise a motorbike for 10 grand, and then he'd rob the people of the cash. That's what he done. So, like, criminals always just find another way to go around. It just becomes another tool for them to use. It becomes, it gets all mad. It happens.
Yeah, I think it's people understanding what they've got in front of them. I mean, I won't name the bank, and it wouldn't have been their fault, to be fair, but there was so much money laundering going on in one area. Just using the National Economic Crime Centre, where there is information sharing, but only really for the absolutely most serious levels of fraud. But they realised that with the bank, and it's a large international bank, but that particular branch was handling more cash than every other branch they had in the UK. So you can find hotspots of activity. In relation to Tony, if you look at, you've obviously got the bounce back loans where, to be fair, financial sector wanted to do KYC, government said no. It's just, it was always going to happen. My team supported a murder investigation, and there were 17 people that we were looking at initially, and every single one of them had a bounce back loan. Most of them were unemployed. When people were feeling lonely at the worst of COVID, people wanted dogs, and the same sort of thing. People were advertising dogs for sale that just did not exist, and so fraudsters are very, very fleet of foot. And for me, it's just around the mechanism. It's like understanding how that can change. For me, there needs to be a way to share that commercially confident information between organisations somehow, whether that's anonymised or there's algorithms to be able to check against these commonalities of the same mobile or the same account within Facebook or whatever. But also those organisations need to have the spotlight turned on them as well, because they are obviously they're not setting out in order to commit crime, but they are effectively enablers and doing very little to stop it.
Yeah, so look, it's brilliant. We've had some really good questions from everybody, and thank you for some great answers. I will be asking you for your closing comments in a little bit, but there's two questions I'd like to ask. I'd like to ask, first of all, Hugo, one of the questions from Richard was, for a receiving bank, the obligation is to reimburse the first 50% and then dispute it afterwards. So it could quickly bankrupt smaller participants, even if the claims are ultimately found to be rejected. And I had at a conference I spoke at this morning. One organisation said they not only had they taken on 2 new members of staff to handle the additional burden expected in terms of fraud handling and customer liaison, but also had created a fighting fund. They called it a fighting fraud fund of £1 million for reimbursing consumers. Now, this is a profitable company, it's doing fine, but it's still a bit of a burn on the balance sheet. How many of these smaller fintechs are simply going to go out of business, Hugo?
As I mentioned before, when we initially talked with you during the interview, I think that we will feel the consequences, because we're opening gates to hell. I can tell you like this. During the 2025, at the end of the year, you will see that majority of the small firms will go bankrupt. Even we are profitable, for example. Of course, we are building reserves monthly, but even for us, it will be big losses with this implementation. Because the fraudsters will start using our services opportunities. What we are thinking, we are maybe thinking even to close this product line and simply stop offering any payments. We'll concentrate on the card payments, because the card industry protects us. Here, with what we can see, we don't have any protection. We have only.
If it's a choice of processing payments bank to bank or going bankrupt, what are you going to do? You're going to stop doing bank to bank. Sorry, if the choice is cards, you survive. Bank to bank, you don't survive. What are you going to do?
Of course, cards. It's our choice right now. It's our choice right now. We spend so much time trying to build what we have, and with this new initiative,
and that's open banking. That's putting a nail in the coffin of open banking, in my opinion. So quickly, we're going to move on because we're running out of time here, but it's great pace, and thank you for everybody for still being engaged. One for you, Nicola. From Tom, what does the panel think about trying a proactive approach where we can directly interact and bait scammers over email, WhatsApp, to try and catch them, both the money mules and the people behind them, that way?
I've got lots of thoughts on that. I think one of the key
couple of minutes.
One of the key things with any kind of scam baiting and stuff like that is that we have legal due process. And what I wouldn't want, and you kind of see it, on YouTube and social media and things like that, is people taking the law into their own hands and potentially compromising. I mean, maybe Warren will have something to say on it, but potentially compromising criminal investigations because they don't know what's going on. They don't know what intelligence has already been shared. You don't know kind of if they're being under watch or have a wider picture, wider view of the picture. So I don't know how much that is helpful. I think what we need to do is really understand our systems, processes, practices, and procedures up to scratch. We do testing. That's what we do. When we test those processes, practices and procedures, we are continually compromising financial institutions at the KYC level because they're not following basic procedures. The basics aren't covered. So I would say it's not really about going after the fraudsters. Some things are outside of our control and some things are completely within our control. And what's within our control is our own systems and processes. Are you testing them? Are they up to scratch? It's not enough to tick the box. You can't just say the regulators say we must do this, so therefore we tick that box and that's going to stop fraud. A ticked box has never stopped a fraud, ever. What stops fraud is meaningful processes and procedures, and that they're being followed, and they're followed every time with no exceptions, because crime and fraudsters are like water. They will get in the cracks, they will find their way in, and they will erode systems and processes down if you do not keep them in check. So I can't say it more strongly that financial institutions, all businesses, need to target harden themselves. You need to take a long, hard look in the mirror and take a critical reflection on, are our KYC procedures up to scratch, or have we reduced the friction in our business to such an extent that we've got fraudsters in them, or we've got money mules in them, and we need to get them out. If you can get the money mules out for your organisation, you shouldn't really need to think about how much you're going to have to reimburse from a receiving point of view, because you haven't got money mules there and you haven't got criminals in your bank, in your financial system. Therefore, you won't need to refund because those criminal funds aren't going to come to your institution. So for
So,
me, it's know your own processes and up the game, like up your ante and keep the fraudsters out of your institution, and then you won't have to worry about this regulation. But are we really there
I
yet?
think
Our testing says we're probably not.
so. Very helpful closing remarks. Thank you, Nicola. One word from you, Warren. What would you do if you were the regulator?
Basically, just cross organisations. That this work needs to be will only be beneficial if social media and telecoms companies, etc., are also brought under the same penalties, basically.
Thank you, Tony. What would you do if you were the regulator? What's your word of advice?
Well, I think I'd understand that we only catch 1% of the fraud, apparently. Hence, the stuff that we know is based on 1% of what we've seen. There's 99% of stuff that we don't know, which seems to me like a much broader place, and that I would want to understand much more in depth, especially when it comes to tech solutions that claim that they can solve it either by creating digital identifications, and all these things that Nicola just so rightly said that we as a business break continually, every time we go to do it. So understanding the whole chain of events would be what I would do as the regulator first before,
Very good. So get a new understanding, and maybe even listen to the fraudsters and what they're doing a bit more closely. And Hugo, final closing remarks. What would you do if you were the regulator? We've got a 30 seconds.
I would start, yeah, I would create a national fraudsters blacklisting system, which I mentioned before, where all of the financial institutions inside the country will report each fraudster and blacklist them. It will be the first step how we will start fighting it. And I think it showed very well with the car schemes. It will show very well with the payments as well. Without it, we will not manage to fight it.
Love it. Thank you very much. Look, blimey, doesn't time fly? Thank you to our panelists so much. Thank you to the audience for listening in. Some terrific questions. Amit Sharma said that the PA has a voice, but is the PSR really listening? Everything that's being said here screams that we're not ready and this is not the right way. How do the legislators and regulators not see that? I genuinely hope that this documentary, pulled together by our partners at We Fight Fraud with the support of Cardac, endorsed by our financial crime working group and by many of our members who are genuinely concerned that maybe this isn't quite the answer and we maybe don't have the right solution to a problem that I believe is, as Nicola said, at the core of a social problem, and that we ultimately should be doing things differently better rather than, in this case, differently worse. We are now bang on time. Thank you very much for introducing our documentary on the new APP fraud rules. I've really appreciated your involvement. Thank you to everybody, sponsors and We Fight Fraud and Warren.